Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it careful now because I think we're at that point where, at a minimum, we've got a correction coming. All right, we're going to take a look at the S&P 500 today, look at one of our key indicators that we look at every day, and then check in on three stocks that are kind of hitting the wall. Well, they've been hitting the wall. Nike, Disney, Starbucks, consumer discretionary type stocks. Has the consumer hit the wall? We'll see. All right, let's talk about what's going on here with the industrials, the S&P, and the NASDAQ 100. The Dow was down 32 points this last week. Just very slight movement in here. We continue to see a lot of divergence on the indicators. Same thing over here on the S&P 500, down 4 points on the week. Little doji type candle. Clearly seeing major divergence on the indicators. And on the NASDAQ 100, we were down 18 points, and the same kind of picture is there. Now, when I take a look at the industrials and the transports got a pretty good bounce this week, up 302 points, but there's still major divergence between what's going on in the industrials and what's going on with the transports. We'll see who's going to catch up with who. Are the transports going to catch up with the industrials or vice versa? All right, let's take a look at the S&P 500. Now, the SBUX was down 22.39 on Friday. It looks like a pretty nice little reversal type candle in here. Pretty much a bearish engulfing type candle. We swung up high. Gapped up at the open, swung up high, and then just closed a lot lower in here on the day. And we already looked at the weekly. Let's take a look at the Elliott wave picture that we've got. Let me go to the weekly first. So right now, I'm holding the bullish scenario just because the market's been pretty strong. It's continued to push to the upside. So what I'm watching for, you see this divergence on the RSI. What I'm watching for is a corrective move here for wave 4, minor wave 4. And we'll see how far, what kind of correction are we going to get. The wave 2 that I've got back here was kind of a sideways, so this may be a little sharper. Now, I'll tell you, if this comes down and overlaps this area right here, which is the high of 4607, we overlap 4607, then I think something else is going on, and I'll be moving to my bearish alternative count. Okay, now I've talked about that a long time ago, but I just have, I felt like I gave this a pretty good benefit of the doubt and waited for the rollover. It just hasn't happened. But this is still a valid scenario that could very easily play out. So right now, I'm staying with this count. We'll see what we get for the corrective move. And if it starts becoming much more severe, we break down below 4607, sorry. We break down below 4607, then something else is going on. So that's what I'm watching. Let's take a look at the daily view. And here's the view coming up off that low in April. And I think we've got 5 waves, and I think those 5 waves have finished. Now, what I need to correct something in here. So I was showing this little trend line on the weekly. I don't need to be showing that over here on the daily. So that's the picture we've got with the SPX, and it's the same kind of picture on the SPY, of course. And the level on the SPY is going to be 459.44. That's going to be the kind of the trigger that says something else is going on. But what am I expecting? I'm expecting a corrective move in here. And we'll see if it just pulls back down here to like 494 or whether it goes a lot deeper. Okay, so that's the S&P 500 scenario. Now, this also got my attention this week. Let me take a look right here. I just want to look at the moving average view on the high yield bond fund, HYG. And here's the daily scenario. Now, I've been holding this trend line in here, showing this to my members every day. We look at this every day. And we got a little fake out on the break of the trend line here on the 17th, mid-month. Well, we got a similar kind of thing back here in March 15th. And then it rallied, and then it collapsed. Well, we've rallied a little bit, and then we got this move on Friday that looks pretty bearish to me. Big bearish engulfing type candle, and we close below the trend line. Now, it can't get too excited about that, but it does look like something may be starting. And when I see this with the price action that I'm seeing in some of the major indices, then it gets your attention. We'll see if we get this kind of follow through and we start moving to the downside. This whole scenario got my attention here on HYG because this looks like a 5-wave move down and a corrective move back up. And now, if we break this trend line, I would not be surprised to see it take out these April lows. Okay, so that's the picture that we're watching here on the high yield bond fund. All right, let's take a look at some of those stocks I just talked about. Let's start off with Nike. Okay, so here's how Nike looked going into the close on Thursday. Then they had their earnings that came out after the market closed, and here's what happened on Friday. Down 20%. Huge, huge move in one day. So big collapse in Nike. They're forecasting a big revenue drop. This stock for this last week down $21.81, closing well below the fall of 22. And when we scan over and look at it, where do you see support? Well, it's really hard to, we're right in here. You got to look back and say, well, maybe we start to get some kind of support right in here, right about where these lows were, about 66.5. And, we're talking about the March, April of 2020 kind of lows where the body of the candle was. So right now I look at this and say, well, pretty strong move to the downside, pretty big collapse. This has been in a downtrend since November of 21. So let's take a look at StarBucks, another consumer discretionary. Been in pretty hard down since, that's November 23rd, but it peaked a lot earlier than that. And I'm in the daily. I want to go to the weekly, sorry. Here's what I want to do. I want to go to the weekly view right here. July of 21 for the high. And now it looks to me like this is rolling over again. So now you've got the weekly, we were down $2.06. Here's the daily rolling over down $1.39 on Friday. And then another one that's got my attention was, I thought maybe Disney was turning. And then all of a sudden we get this collapse on Friday, down $2.88. That's not a pretty picture either. So when you look at the weekly and you look and say, well, what's Disney been doing? Well, you go all the way back over here to March of 21. That was the high. Now we'll see whether or not this is going to get its feet underneath it or not. But you've got some of these very much consumer discretionary type stocks that are really starting to struggle. Could be a sign that some things are changing in the economy. Okay, that's it for this video. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to this channel, hit that little subscriber button. And you head on over to joehenches.net. Check out the website, check out the membership. Everyone have a great week. We'll talk to you on the next video.